So especially non-residents. So I think they need to keep this in mind, that they need to start their tax filings once they let out this property. Second is when they are selling their property in India, again there is a withholding that comes there. The rate there is 20%. The law says that the buyer has to deduct 20% on the capital gains that the non-resident is making when they are selling the property. But practically it is impossible for a buyer to know the exact amount of capital gains. So what happens actually is that the buyer deducts 20% from the entire sale proceeds. So that could impact the cash flows for the non-resident, because they may be selling a property, let's say for 5 crores, but if there's a 20% TDS that is withheld, if you add the surcharges and cess, it could go as high as almost 25%. So 25% on 5 crores is almost like a crore and 25 shaved off. Again, like I mentioned earlier, if they are reinvesting this money in another property, there is a possibility that they can claim back this TDS, but that's only when they file the return. At the source, this money will get deducted. So I think this TDS is a big cost for NRIs, because the cash flows look very different from in case this TDS was not applicable, like it is in the case of a resident individual. Other than this, I think non-residents are happy to invest in India.
Investment in securities market are subject to market risks. Read all related documents carefully before investing. The securities quoted are for illustration only and are not recommendatory.